Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como from Ireland, Como Lafoy. Today we got a little bit of a bloodbath in canola to talk about today. So let's go through our futures prices first, and then we'll get into some charts and some news and things like that. Canola was down $24.30 on the July contract this morning, settling at 686.80. We had Minneapolis wheat up 2 cents to 625 and a half. We had Kansas wheat up 6.5 to 539.75. We had Chicago wheat up a nickel at 539 even. Soybeans were down 8.25 today at 1033 and a half. Corn was down 5.75 at 438 and a quarter. The Canadian dollar is trading almost up at 73 cents at the moment, the highest it's been in a little while. Live cattle was up a little over a cent at 211, and feeder cattle were down or up almost 3 cents, again trading over $3 a pound at 301 and 3/4. All right, let's get into some of the charts because I want to show a couple of things here that we had been watching. Now, here's our July canola chart. As I mentioned in our last video, I layered on the Fibonacci retracement, even though I didn't think it was warranted yet, but it sure is now. And so here's what that looks like. If we're going to see a correction down to the 61.8% Fibonacci retracement level, which is pretty common, that brings us down to $633, almost $100 a ton from the highs. And that is a Fibonacci retracement from the lows seen in March after the tariff news from China was announced, and to the recent highs that we saw here in the middle of May. So it's not out of the realm of question that that is going to occur. Now, why today did that happen to canola? And I just kind of want to show one chart here of managed money. This is speculative traders, bankers, dentists, all those kinds of people who look to profit from the rise or fall of canola, not because they're hedging or because they're commercials or because they're farmers, but they're considered speculators by the commodity exchange departments. So today, or as of Friday, I shouldn't say as of Friday, as of Tuesday last week, which was reported on Friday, speculators were 105,611 contracts long. Now, canola hasn't been reported on the CFTC for very long. So, we don't have the same level of historical data that we do for other commodities. But here's what that looks like from a historical standpoint. They started recording it in 2018. That long position at 105 is by far a record large position. Rose very sharply from, the beginning of April, when the market looked like it had started to bottom. They started to grow. As you can see here, this was actually short. Here's zero right here. So this they were short canola after the tariff announcements and even Trump's tariff announcements, but they grew this position to 105,000, over 100,000 contracts, which this tends to be a contrarian kind of indicator. And when the funds get spooked and they need to sell to either take profits or eliminate risk out of their portfolio, they can sell this down pretty quick. And I think that the size of the fund position had a lot to do with the depth of the move in canola today. So that's July canola. As you can see, it broke below the 20-day moving average. It's broke below the 23 Fibonacci. Not that that's a super important one. This 38 one might become important. We might see some support here. We might see some minor support here at 661, where it kind of consolidated here before moving higher again. But 61.8 would be the full retracement target on the Fibonacci at this point, which, as you can see, would break below a lot of the other moving averages. So it's a pretty risky thing. It's also pretty risky to wait until that 61.8 test in order to see if this is for sure going to continue to correct past that. I think if you are a hedger, aka farmer, or even a buyer, um, particularly if you're on the sell side, so if you're looking to hedge some prices at the higher areas, you might want to do that, maybe a little bit more sooner than later. So I know it probably would feel like you missed the boat on it, but sometimes it is prudent to pull the trigger and ask questions later, particularly if you're using risk management products such as put contracts or call contracts or over-the-counter contracts that utilize those same kind of mechanics, which a lot of grain companies do offer here in Canada as well. Okay, here's the November canola. Now, in our previous videos, we had kind of been talking about some differences between November and July, and how November had been trading above the 20-day moving average and above the trend line, this blue line that you can see here. As you can see, both of those have now broken. And so if we want to put those same kind of Fibonacci retracement levels on here, and we can see that 61.8 brings us back down to 6.25, from the highs. Not quite the same $100, but still, a big risky, a big risky move to wait for, to see if it's going to, if it is going to, hit bottom at 61.8 or at 6.25 and move up again. So again, if you haven't hedged any November canola, this might be your warning sign that you might want to do that before it corrects too deeply. Some other commodities. So canola was the one hardest hit today. And again, I think perhaps because of the size of that spec long position, that there was just some serious liquidation that occurred. But we did see some losses in some of the other oil seeds as well. This is soybeans on the July. I don't know. Oh, here we go. Here's my little title card, or whatever you want to call it. As you can see, it broke down below support as well today. We are looking at support around here at 1035 or so. It closed at 1033. It also has moved down below all the moving averages recently. So where would we see some potential consolidation here, potential some support? 1010 here, as you can see, is kind of the bottom area of where this consolidative move was made. And then, of course, this low down here at about 980, call it 985-ish, is some potential pivot points for soybeans as well. We'll get into weather here in just a second, which may be affecting the, this corn and soybean market may be being affected more heavily by weather markets. And this might be a prime example of why that's happening. You can see that corn on the July, moved down to test or pretty close to previous support here. So if it starts to break down below that level, that might be a concern for some short-term weaker prices as well. We are recording this prior to today's crop conditions report. So, if that looks favorable, which I'll get into that in a second, it might rally some of these commodities into the morning or into the late night session tonight. But yeah, some risk on the table here if that doesn't occur in a big way. One, in our commentary this morning to our premium subscribers, we talked about the wheat strength, and even that kind of had a little bit of a back off moment today. So it didn't close near its highs, which would have been nice. This is spring wheat, July spring wheat. It did kind of fade back during the day to close below the 200-day moving average, which is a little bit concerning. But we still saw some decent strength here in some of the others. So, a nickel up in the Chicago, which did again break above the 50-day moving average. And this 50-day moving average was tested by Kansas wheat as well. So it looks like that 50-day might be a little bit of a resistance point at this point, and we might need to watch out for that, particularly if conditions continue to get better in the plains. Here is soybean oil. So again, this probably was one of the things that triggered the canola exodus today as well. Again, as you can see, it's not down nearly as much as canola is. Again, I think that is because of the size of the fund position. If that fund position had been in a more normal range, or maybe not at a record large, I think we probably would have seen canola fade consistently with soybean oil, maybe see a little bit of a correlation there. But the vegetable oil complex as a whole was lower today. That is also despite some really good strength in the crude oil market. As you can see, crude oil went up today. The OPEC Plus announced that their July increase would only be 411,000 barrels per day, which was lower than what the market was expecting. So that rallied crude oil. Hasn't rallied it up past some previous highs or anything like that, but still a really strong day for crude oil, which normally would pull up vegetable oils, but wasn't able to do so today. Another thing we wanted to talk about was the Canadian dollar chart today. It did break to a new high today, settled a little bit lower, but as I mentioned at the start here, it's trading right around 73 cents now, which is near the high of where we've seen. Maybe I should blow these charts up a little bit more. Where we've seen in the past. So some good economic data out of Canada, and we continue to see some concerns from the US, which it does affect this pair as well. So the Canadian dollar is looking bullish here, which also is putting a strain on commodities such as canola as well. All right, let's get into. I'm going to go back to this slideshow. We're going to talk a little bit about weather here for a little bit. This is the growing season agriculture and Agri-Food Canada maps. You see these a lot all over the place. Because they're a good representation of what is kind of happening out there. The one thing about the average percent of average precipitation in years that start out dry, sometimes they can look dry all year as a result. But I think at this point, this is a pretty accurate description of what the conditions look like overall. Some good precipitation in central and south Alberta. We're still seeing some concerns in that east central east area. And then, lots of concern as we kind of move down the Yellowhead Highway and north of the Yellowhead Highway, particularly. Same thing, as we move through the Yellowhead Highway, north of the Yellowhead Highway, even in Manitoba, is a bit of a concern. The southeast area of, the southeast area of Saskatchewan, the southwest area of Manitoba are well supplied with water, and we're getting more of that today. As well. And then, of course, there's the eastern part and the northern parts of Manitoba, which, and the parts of Saskatchewan, lots of wildfires still going on there. We're getting rain here right now in Winnipeg, and it's the air is still quite smoky because of the wildfires. Lots of folks we know are getting evacuated from different communities. So, our thoughts are with those and with those people who are getting evacuated in other areas as well. Definitely not a good year for wildfires here in Canada. Did want to kind of show a 7-day accumulation of precipitation. So this is where we can kind of get to see a little bit better of a picture sometimes. When those growing season maps start to look a little bit skewy. But as you can see here, even this 7-day precipitation, we're talking about half a millimeter or less in many, many areas here in Saskatchewan. We saw some precipitation in Alberta recently, which will help some of those areas, but the eastern part is still dry in the last week, and you can see lots of dryness here in Manitoba as well. Just to kind of punctuate on that, I'm going to show. Here's the system that's moving through. So, kind of some kitchen window marketing with me today. It's been kind of a rainy day for most of the day today. This radar here starts just after noon. And as you can see, we've got precipitation that tracks just south of us and through, the city of Winnipeg. Likely is going to cancel my daughter's softball game today, which actually I'm not too upset about that. Every once in a while you need a break, and she works hard almost every day at that. Anyway, so my kitchen window marketing, we're getting some precipitation here in Winnipeg and the southeast part of Manitoba, but not a lot today anywhere else in the Canadian prairies. All right, moving on to the forecast here. This is the 120-hour forecast from 6 o'clock this morning, this GFS model. As you can see, Not a lot of precipitation the next 5 days for much of Western Canada at all. So, much of the same conditions, still some concerns for us here in the Canadian prairies. The US is a bit of a different story here. There is quite a bit of precipitation that's coming into the corn belt of the US, which I think is what's probably putting some pressure on corn and soybeans um, today as well. So this is, what I would call the majority of the corn, the row crop belt. All the I states are represented here. Lots of good precipitation, 3/4 of an inch to an inch to 3 inches in some areas here through much of the corn and soybean belt, just to kind of illustrate where this is grown here. So, that big, Nebraska, Iowa, Illinois, Indiana, southern Minnesota. These are all the areas where a lot of the row crops are grown. This is the map for corn. This is the map for soybeans. Um, the one thing though, and I'll kind of here's spring wheat map. As you can see, a lot of it's grown in the northwestern part of Minnesota, and most of it in Nodak, and some of it in Montana as well. And if we go back a couple of slides here, here's the again, that 5 day. Not a lot of precipitation here in Nodak, and even the spring wheat growing areas of South Dakota. Maybe a little bit better in the northwestern part of Minnesota, but not by a lot. So spring wheat is still a little bit at risk here as far as the precipitation forecast goes over the next 5 days. All right, skip back ahead here again. Here is just wanted to lay out here the one part of the soybean belt that is a little bit at risk here is the, maybe I'll use a pen here. This here basically is the soybean growing peninsula of the U.S. This is the Mississippi River here, and the lots of soybeans grown along the delta on either side of the river here. This is relatively dry, and here maybe I'll go back to the soybean production here. That's where we see this area here. So there is quite a bit of soybeans grown there. It is a little bit dry. It isn't the major area of soybean production, but it still is important for the soybean crop in the United States, and also even for river levels, things like that, getting the crop out at certain times. So if we don't see a lot of rain there, the river levels tend to drop, and that can be a bit of an issue. All right. What else do I got here? It looks so this Reuters does have a crop watch program, which I think is a voluntary. Some producers there voluntarily provide information to Reuters, and they call it the crop watch. They're looking at improvements, so they kind of put out a report prior to the crop condition ratings on the Mondays. They're calling for a little bit of an improvement in the corn condition ratings, but the are stating that the soybean health is still lacking for this week. So if that's an indication of what's to come in the crop production or in the crop condition report today, we shall see in about an hour or so from when this is being recorded. All right. Some good news. This came out on Friday, I believe. India extended its yellow pea duty extension, or its lack of tariff or duty, I guess, into March of 2026, which is, I would call this mildly bullish news. The pea growers here in Canada, we still face 100% import tariff into China. So, continued access to the Indian market is very important and very welcome to us. As of right now, again, still there's no end in sight to the end of the Chinese tariff. So we will need to find new markets for our yellow peas here in Canada. And it looks like for most of the 2015-2016 crop and marketing year, we will have access to the Indian market. So that is that's a good sign. All right. I think that is all we have for you today. So thank you for tuning in. Tune in again tomorrow, and we'll see what happens with this canola market. Make sure you're protecting yourself out there, and we'll see you again tomorrow.